Good afternoon, good evening, class, and welcome to our lesson today. Just a small hint. So, our last lesson, we had some challenges, and we first apologize for the problems with the network. And today we have actually checked on that, and I believe that our lesson will be okay. So last time we were to discuss about Excel dashboard, and we shall actually do this one. We will repeat this third lesson again, but we will extend our lesson a bit so that we can cover up whatever you had to do last time and what you are supposed to do today. So our today's lesson, we were to discuss about financial forecasting, which was actually is actually part of the syllabus that you are supposed to cover. That is under this first part of our syllabus about the financial accounting and reporting. We did the financial statements, and I believe that now everyone is able to prepare this balance sheet, the income statements with no challenges. Just keep on reminding yourself, do several exercises. We did the ratios, the common size and such. So I hope you still remember that. And today we are supposed to just prepare the financial forecast statement, which will be given some specific assumptions, and we are going to see how you can assume or you can give those assumptions. Then, first, what do you mean by financial forecasting? So financial forecasting is actually something you did learn in, I think it was section 3 then, and it involved the determination of financial requirements of the company in advance. So, and we say that it is normally important. The importance of this financial forecasting is that first, it forces the management or the managers to plan in advance and to allocate the resources effectively. It will help the company to actually know or identify, because you are a forecast, you are given 1 year, you're supposed to focus. So you write a balance sheet or you prepare a balance sheet that should be forecasting on maybe 1 year ahead or 2 years ahead and so on. Then it helps the management to avoid surprises which might occur in course of operation. That is, if there are any cash deficits. So it is used for control purposes, that is to enhance the control of expenses and to avoid wastage. It also helps us to use for motivation purposes, that is managers and workers are aware of what is expected of them, that they work to achieve the objective of the business. That is another reason why it is always important to do financial forecast. So in every business, it is always important to have a prediction, that is from the sales you make. Remember that you have to check on a number of things. We have so many methods you can use to do financial forecasting. The most common is why we use percentage of sales method. That is what you are going to use here. And there's also another method of using the cash budget. So we're going to use the method that is most common, and actually this most tested. Actually, most of the questions that you have tackled so far in your accounting were just revolving around the percentage of sales. So in this method, then, which type of equation do you really solve on this? So we'll check here. So we had a question here. It was on one paper, financial management, November 2016. I've sent a screenshot there on WhatsApp, but I'm going to send this worksheet in your machine. That under the chart, you can download it. Then once you download the question, then we are going to run this together. So I've sent that worksheet there under the chart. I'm sending another worksheet. WhatsApp, so you just download that worksheet. So as you download the worksheet, then you go through the question and check what is required from us, that is to handle that question and how you're supposed to go through this. You have a book and a pen. Is important to note some steps so that once I give an assignment, you'll be able to go through that assignment. So now I believe everyone has got the question. Can you confirm if you did get the question? Yes, confirm if you got the question. Then we can now proceed. If you got the question, it's always important to confirm. So let's begin. This is our worksheet. Maybe you can also confirm whether the screen is visible. I don't know, someone was saying that it's not very clear. Can you really get the screen properly? Just confirm, because I'm not able to see how the screen is displaying for now. Check the clarity. So now from there, we are supposed to go through this. The management of this Georgia Limited wishes to establish the amount of external financial need for the year ending 31st, 2016. That is, this company didn't want to know whether they need to borrow more money, proceed running their business. And whatever we are given here is actually the balance sheet for the year ending 31st December 2015. That is what you are given here. And you are supposed to prepare a financial forecast of this company for 2016. So you have said that the method that you're going to use is that percentage of sales method. And in this method, what are we supposed to first? What are the requirements and the procedure? So the method, we will have to follow this procedure. Step number one is first identifying the balance sheet items, which varies as the sales varies. That is, which of the balance sheet item varies as the sales varies. You need to confirm that, although not always that they have to vary. Sometimes some will vary, others will not vary. That is, if you are told that this company did make a sale of a specific amount, then the assumption will be or will have a conclusion on an assumption that the sales increased because we had increase in assets. We had also decrease in liabilities. So we can just write down an assumption like that. So that is the first step. That is, you identify the balance sheet items which varies as the sales varies. And this one include what? Which items of the balance sheet that varies as the sales varies? Maybe you can highlight them on the chart. If you can recall some of the items that will vary as the sales varies. So please confirm that. What do you think will vary as the sales varies? Can confirm them. Inventory, account receivables. What else will vary as the sales varies? So that is the first step. The first procedure is to identify what is that will vary as our sales varies. So that is one very important step, because it will actually help you to go through this as you run down, get to identify those items. So the basic item that sales varies includes non-current assets. Non-current assets. When we talk of non-current assets, we are referring to fixed assets. We are also referring to current assets, current liabilities, and retained earnings. Those are the balance sheet items that varies as the sales varies. So the first step is to identify those items. Number two is to express the various balance sheet items which varies when the sales varies as percentage of sales. So you have to express those items that are identified as percentage of sales. So we are going to run that step. Then after that, you have to determine the financial requirements by multiplying with the incremental sales of the percentage of sales. That is, once you express the various balance sheet items, which varies as the sales varies, then the next step is to determine the financial requirements by multiplying with the incremental sales of the percentage of sales. So that is, you have to determine the requirement. That is, what amount needs to be borrowed. Then, after that, you have to compute the external financial requirement during the forecasting period. And we are going to see how you are supposed to run this. So back to our question. In this question, we are given these assets here. We are given assets. These are non-current assets and current assets. Then here we have financed by the ordinary shares, the retained, this is retained. You can rectify that. Retained profit. Just rectify that. Then we have the debentures, that is 14% debentures. Then you have account payables and accrual expenses. So whatever is here was not actually computed. You can delete that. It was not part of the equation. Even this was not part of the equation. So I was just trying to compute those, but they are not part of the equation. Then additional information you are given here that the sales for the year ended 31st December 2015 amounted to 120 million. So of course we have said that we are going to express our figures in thousands. So that means here we'll be referring to as 120,000. Then the company forecast that sales will increase by 10% for the year ending 2016. That is, if this was 120, then it increases by 10%. That means you take 120, 10% of this, the 10% of this, then you add with this amount, you will get the amount that it increased by. That is the sales for 2016. Then for the year ended 31st December 2015, the amount that is after tax profit after tax was amounting to 18,000. Then the company adopt a policy, the payout, the ratio that it pays the dividend 80% of the dividend to its clients. So meaning that it retains 20%. That is the payout that is expected to remain. Then after the after-tax profit margin is expected to remain constant. The assets are expected to vary directly with the sales. We have also said that we have already said that the assets are expected to vary directly with the sales. That means as the sales varies, then the asset varies with the same proportion. Then any external financing will be affected through a long-term debt financing. So it will be categorized under long-term liabilities. So the required, first, you're supposed to compute the amount of external 12% long-term debt financing that will be required for the year ending 2016. You're supposed to know or to compute how much money is required. That is the amount the company needs to borrow more. Then you're supposed to prepare the forecast statement of financial position. That is a balance sheet for that 2016. And then finally, you're supposed to comment on the weaknesses of using. That is what we are referring to as assumptions. Because this method, as you use it, there's a number of things that will be assumed. For example, like it's not always that you have to, all the assets you have to increase just because the sales has increased. Sometimes some assets will not have even increased, but the sales will also increase. But the assumption here is that every asset will vary as the sales varies. And we are going to see other assumptions later. So that is what you're supposed to compute in our in this computation. I hope you are together up there. First, you have to, every time you are given a question, and we saw that one in the previous exercises, you have first to analyze the question, understand that question, read the additional information. Some people just start attempting the question, yet they have not understood what is actually added here. Because the additional information you have to structure how we write down our outputs. So after you analyze this, then our next now computation is first to identify the balance sheet items which varies as the sales varies. We said we have what? So we can just compute this one just a little bit. That is aside here. You can just have it aside here. And now if you have your worksheet, we are going to identify those. So before we do that, I have added this one here. You can actually write it because this was part of additional information. It was not in a specific cell. I've already given you that the sales for the year 120,000. Remember, it was 120 million, but since we said we are expressing our values in thousands, I've typed it that this amount here. Then how did I get the incremental sale? Incremental sale, we already told that the company forecast that the sales will increase by 10%. That's simply we take 10% of the sales of the year and you get that incremental, the incremental sale. The incremental sale is 12,000. So that is how I achieved those two values there, and we are going to use them. So I can just hold them there. Then let's now proceed here, and we want to identify those items. We start with the non-current assets. The non-current assets. These are items that varies as the sales varies. So we can even indicate here that items that varies. All right. Items that varies as sales varies. So, and we said which items are these? First item is what we are calling non-current assets. Non-current assets. So if maybe you forgot this, then it is always important to record somewhere. So now, since we already have these, we don't have to type them again. We just copy and paste here. So you just select those 3 items and then we paste them here. That is the non-current assets, the item that we expect that they will have to vary as our sales varies too. And we have to record them in a specific cell. Then we also have current assets. So it's important again to indicate the current assets. So the current asset that you're given in this worksheet, we have the inventory, we have receivable and bank. Again, you can copy them from here and arrange them here. Increase the screen size, I'm doing that. So the other thing that you need to set is the current liabilities. Current liabilities. So you can also indicate that current liabilities. And once you set the current liabilities again, another milestone. So what are we given here? Under the current liabilities, we are given these 2. These are the items that will vary as the sales varies. Notice that the ordinary share capital, that is the equity, retained profit, and the capital in the ventures, this one will not change. They will not change as the sales varies. So those one is just retain. They will have to retain. Even in the balance sheet, they will not change. They will have to retain the same value. So that is the first thing that you do to identify those items that you vary as the sales varies. The last item, you call it the retained earnings, retained earnings. So you have to indicate retained earnings, retained earnings. So last time I told you that what you're supposed to actually master is the format. That is the structure or the method of solving a question. It did not really change so much from what you have been really doing. That means you should always remember how you're supposed to solve this. Then, now those items, how will they vary? You said that the first step is to identify the items. We have done the first. The second step is to express these items that varies as the sales varies as percentage of sales. That is, when you are running this or during the operation of this business, we need to know the percentage of plant and machinery as the percentage of sales. That is, plant and machinery was how many percent of the sales that they did make. Because our assumption is that if we want to make more sales, then we have to increase our assets. We have to increase plant and machinery. We have to increase furnitures. That is, we are assuming that the increase in our assets will always increase our sales. So we need to identify the percentage of this as percent of our sales. How do you do this? We just say a simple formula. We start with an equal sign, and then you take the value of plant and machinery, which was actually here, and we are supposed to divide by the sales. That's why I computed this value down here, because you're going to use it. That is the sales of the year. And that sales of the year is supposed to be absolute. You have to press F4 to make that cell absolute. So I hope you have done that. So you just enter that simple formula that you take the plant and machinery, divide by sales, and then press enter. Then you have to convert this value into percentage. So multiplying by 100 here, we just click on the percentage icon. That will automatically do what? Change that amount into percentage. So I hope you are together up to that form. So please confirm whether you are left behind. Then if you are left behind, you can repeat. So, so we have simply said that first you have to express those as percentage of. So, tumefanyaje? You just start with an equal sign, you select the value of plant and machinery, divide by the sales of the year, of which sales of the year, this amount is supposed to remain constant. So in our formula, that cell containing that value, that is B22, we make it absolute by pressing F4 on the keyboard and then press enter key. Then convert it to percentage by clicking on the percentage style command here on the ribbon. Then from there, since they are following up here, then automatically when you drag this down, it will compute the rest. It will give you the percentage of furnitures and fittings, percentage of sales, the motor vehicle again as percentage of sales. Yeah, then you're supposed to compute for inventory and for these. So we do the same procedure. So you say is equal to inventory. Inventory was here. Then divide by again by sales. And then we make that sales absolute. And then press enter. Then from there, converting it to percentage, you click percentage. And then you can copy this down to get the percentage of the others. So that simply means that if it is inventory, it was actually 16% based on the sales that they did make. Then finally, you are supposed to express this. That is the account payables. And so again, you start with an equal sign. Where is account payable? Account payable was this amount, 18,000, divided by the sales, then absolute. You press enter, and then you represent this one in form of percentage. And you can copy this down to get again the accrual expenses. Notice that it will pick the values of accrual expenses. But now, before we calculate for retained earnings, then there are a number of things that you need to compute there before you get that value of the retained earnings. Then you need to compute what? So one, you need to know the expected sale. You need to know the expected sale for the year 2016. You need to know the incremental sale, which you have already computed. Then you also need to know the profit margin, so that you'll be able to you actually identify the likely profit margin that will help us to know the retained earnings of the year 2016. So you can compute those one just slightly down here to identify those amounts. So we can start with the expected sales. The expected sales, that is for 20. So you just type there expected sales. Expected sales, that is, you also need to know the incremental sale. Of course, we had already computed it, but we are going to compute it again. So somewhere here, then you are supposed again to know what else. You're supposed finally to identify the profit margin, net profit margin. And if you remember very well, to compute the profit margin, we are supposed to take the profit after tax, then divide by the revenue, multiply by 100. That is the formula of getting that margin. So how do you get the expected sale? So we are told that these sales that you are computing here, that this company did make sales of how much? 12 and 20,000. But you are told another additional information that the company focus that the sales will increase by 10%. That means you need to know if it increases by 10%, then what will be the sales? So you can use one simple formula whereby you will say that equals to the sales of the year, then you multiply by 110, because if you are told it is 10%, then if you multiply by 110%, then it's supposed to give us what? Supposed to give us the sales, the expected sales for the year 2016. The incremental sale, of course, you are going to check if it was increasing by 10%, then the incremental sale will be the sales of the year, then multiply by what? By 10%, by 10%. And what you're going to get is incremental. Remember that here we have multiplied this by 110. And here we have multiplied the same with 10%. Then finally, we are supposed to compute the net profit margin. And here you're going to check the net profit over sales. So we start with an equal sign. We say the net profit is actually the profit that you already given down here. We are told that this company, the profit after tax of the company amounted to 18,000. So we're going to take 18,000, then divide by what? We're supposed to divide by our sales. Then you multiply by 100, and multiplying by 100 here means just setting it to percentage. So the profit margin was 15%, 15%. So once we finish up with this, then we can now compute the retained earnings. And how do you get these retained earnings? A procedure, a very easy procedure that you're going to run, that to get the retained earnings, we have to use the net profit margin. That is the net profit margin, or you can even use, they're actually the same, but I'm going to use the net profit margin down there. And we're going to do a simple computation here. So we'll simply take our profit margin, which was 15%. Then you multiply by the amount that you are expected or expecting for the sales. And when you do that, it will give you specific value. So, of course, those sales must be absolute, no problem. Then once you finish, we had some, so whatever you're going to get here is a very fun number. You can see that was the amount that we expect. But the company adopt 80% payout. So that means 20% was actually not considered. It's supposed to be considered here. That after we multiply 15% of this, then we are supposed to multiply by 20. If it was a number, we just need to add. But now you have to multiply by 20%, and the amount that you're going to get is this amount here. So I'll prefer this amount to be computed just slightly. So that amount will be placed there. So notice that the amount we're going to compute now, then after this is that specific amount that we need to get for this plant and machinery and the rest. So as we wait for just a minute, so to see some of the. So someone is asking where 20% is coming from, or where we have already said that this 20% is the remaining percentage. The remaining percentage of the company pays off 80% dividend. Over that remaining, the remaining amount, 20% is what we have, because that amount or money will not just get lost. It must be either retained in business. It have to be retained back to the business. So after computing this, then you need to compute now the values. And we're going to get these values by taking that percentage, then multiplying by the 12,000. That is our incremental sale. So how do we get that? So we say the step number 2, that we are supposed to express those items that changes as the sales changes in percentage. We have already done that. Our next step is to determine the financial requirement by multiplying with the incremental sale of percentage of sales. The incremental sale of percentage of sales, already we have computed that. And we're going to express this as that percentage of sales. So how do you go about this? You start with an equal sign. Then you say plant and machinery, you say is equal to that 26%, which is this amount here. Then we multiply so we multiply by the incremental value. So we take 26% multiply by 12,000. 12,000 is absolute. You make it absolute, then press enter. So to give you some values here, you can just highlight down and you get the other amounts. So you're supposed to do the same for the other items. Just pick this equals to multiply by so the amount is down here, that is this amount. So you have to again make it absolute, then press enter. So now you can copy this. Then finally, it's supposed to compute the payables. Although we say that for these payables, the amount is supposed to be negative. So that means if you take this, so every time we take this value, then multiply by our increment value, that is. But we need this amount to be negative, so you can put a negative sign there. Then if it is accrued expenses, again, start with an equal sign and choose 10% of the incremental value. We say that when entering this formula, you can have a minus. So that is always the first step, which I think you have captured it very well. And that one will help us to answer question 1, that question that we are told to compute the amount of money that that is the required amount required. So this amount again is also supposed to be minus. So where we are setting, just put a minus somewhere and you convert it into a minus sign. So how do you get these values as Now the total, because these are supposed to be deducted, these are supposed to be added. You just insert a simple function here. The function you say is equal to sum. You select sum from here up to here. And then just a minute. So let me have. So notice that we will have to include some cells that were not used in calculation. So I will just choose some. Then I highlight these cells. Okay, I've noted something like this data has shifted down. Why is plant and machinery? Then you take 26% of the increment. Just a minute, this was 26%. So that is the amount. Actually, it is just fine. You take this amount, multiply by this, and you get the value here. So meaning to now compute the sum, you can use the sum command, and we choose some of these numbers. So the amount that you're going to get here is what we are calling the external financing required. That was the external financing required. So you can actually indicate somewhere that this was external. So now once you compute this, the first part you already through, because we are able to answer question 1. That is the requirement number 1. And requirement number 1 was the amount of external long-term financing that would be required for the year ending. So which we have already identified that this company, after its operation, if it was to predict or to project, after all their projection, the company need to borrow 3,000 more. Need to borrow 3,000 more. So that is how you're supposed to go running this item. Then finally, the next question, you're supposed to prepare a forecast statement of financial position at a specific time. So here you're supposed to structure. You can just do it down here. You can merge those two cells. And then you type the name of the company here. So we are forming that simple balance sheet. And you know, the principle of the balance sheet is first, you must start with the name. So it was actually given as at 31st December 2016. So that is part. You can have your balance sheet using the either of methods. You can also use a tree. And to use the tree here, you have to first set some borders to make our work look neat. So meaning, here you are going to choose just the same way we did here. You are going to select the non-current assets, current assets. So you can just highlight all that, and then on your balance sheet, you just paste. Remember that again, those amounts will be expressed in what? So here, I can remove the borders, say no border, but retain this right border. Light border should be fine. Then again, you can highlight this and retain the bottom border. You form a simple tree. So up to there, I hope you are fine. On the opposite side, can separate this one. So then we're going to take financed by. So the first financier was, you have to go back to our data and pick those records. We are ordinary shares, debentures. Copy that. So we can just copy the data. Then we move it down here. So after this, you're supposed to have the long term. Long term. Mm. So here we have water note. The only item to call, we have the benches. So you have copies. So in our data, you have already taken that. That is the debentures, which was 14%. Those are the long-term liabilities. And then it's supposed to have now the finance. So here you can just type external financing required. Yes, external financing required. So you can be solving that. Just enter the values here. You're going to process okay, we need to have an extra column. So you have to insert an extra column, or just a minute. Let's just remove this one from here and jump one cell. And then instead, we're going to put our border here on the right side. Now with this, or with this standing, we're moving to no borders. And then applying borders. And we said just put one kind of a border. There you go. So you have that. So this is our statement of financial position, and it will be as at 2016. 2016. Then to format, always is a way of setting this. You can use the border. We have the top and bottom border. So here we use those two borders. We said that what is required first here, we must have the non-current assets in business. Those are the non-current assets. We have to set up the current assets. So we have those as our current assets. What else do we have? We are given this financed by what? This, again, we set them here. Okay, just then you're going to type in the values. To confirm that you're not affecting your data. Then you just type in the values in these cells. Then finally you have the, so that is how you're supposed to set up this. So we have already identified what our balance sheet requires. Balance sheet will require to have these values. So And for the prediction, because it's a sales forecast, notice that we already have the sales of 2015. Whatever we had here is the balance sheet as 2015. We already given that. Now, we are told the sales increased by 10%. So the sales increased from here to here. That is, it increased from this 120,000 and it increased to 132,000 because we are told under the additional information that it increased by 10%. And the other items that will be affected by this is all the non-current assets, all the current assets, and the current liabilities. They also be affected by this. And now considering the fact that our retained earning will also be affected by the profit margin, which was given, that assuming that the profit margin was this. So meaning that if the sales increase to this, then the profit margin, we expect our profit to be how much? That is what we need to get this amount. And again, considering that the fact that this company was not giving out the dividend 100%, they are retaining 20%. And that 20% we have added there so that you get the retained earnings. Then finally now, we are supposed to compute this balance sheet here. So how do you compute this? It's very easy. We'll just take the amount of 2015, we add that amount that increased. That is the plant and machinery at 2015. So you just start with an equal sign, say that at 2015, it was 31,200. Then we say plus, as the sales increased from 120,000 to 132,000, then the plant and machinery was assumed to increase by, that is to be this amount, to increase to this amount, not by this amount. And when you press the enter key, it will give you now the value of plant and machinery as at 2016. Since this formula you have just picked from above there, so that means you don't have to pick for the others. You just copy down and it will give you for the other values. Then again, you proceed to current assets, the inventory. How was the inventory? If you check from our data, the inventory here was 19. It was 19,200. So 19,200, we are adding, assuming that the sales increased to 132,000, then the inventory was supposed to again rise to this amount. So again, you press enter, and you get that this amount again increased to, yes, it was this amount. So it delays. We are just forecasting. We are just focusing to that. It's financed. Then once you get this, because they actually follow each other, you just copy down again this in your worksheet. So for those items that you know will not increase as the sales increases, like the ordinary share capital remain the same, that simply means you're just taking that data as it is from our worksheet, that the ordinary share capital was 42,000, so it will remain the same. But you are able to compute the retained profit, where we said that the retained profit is this amount we computed over here, the retained earnings, the retained earnings. So you select, just a minute, So how was the retained earning? We are told the retained profit was this. Okay, you are supposed again to add, because we are told the retained profit was this amount here. And as the sales increased, it also increased to what? Why is that? It increased to retained earnings increased to this amount. So meaning that, and it was minus. If it was minus, how do you have to handle that? Because you have to handle that one very carefully. Remember that since it was minus, we can say plus the amount here was minus, so we can say plus. And we say plus, then it will take minus that amount. Plus minus that amount. So let's pick it. We say plus. Just a minute. Say plus what? Plus the amount which was given over here. The retained earnings. So that amount is 2. Okay, just a minute. Yeah, so you have to say minus plus, then minus that amount, because is this supposed to be minus, minus will be plus. Well, minus, minus, this will be plus. We can say equals to, because if you say minus alone, it will give you a negative value. Then you can say plus, then minus that amount. So you'll get that 21,560. So our debentures. Here, we are already given, this is not changing too. You're supposed to pick that value from here. You say is equal to, why is our debentures? We'll pick that amount. That is 10,000. And we have 10,000 there. Oh, just a minute. So then finally, there was something we're calling the financing, external finance. We are supposed to add that external finance here. Whatever we computed will be added. So we say external financing. We just pick it from here, copy, and you paste here. So I have to divide the cells. So the external finance was how much? That is the amount that was actually borrowed. It was 3,000. Then the long-term liability, just a minute. There was a problem here. It's just a repetition, so you just remove this as a repetition. We don't have to have it there. So we have the ordinary share capital, we have the retained profit. Oh, there was a mistake. This was supposed to be under the current, it's already there actually. So it's supposed to be here. So the debentures, we take the 10,000 that was already given above here. And then we say we have to add this, the external financing required, which we computed here as 3,000. Computed as 3,000. So I hope up to there is fine. It's fine. Then we have the current liabilities. The current liabilities, we have not included the current liabilities. We have to include the current liabilities. So you just type there, current liabilities. So the current liabilities already given supposed to be this. That is account payables and accrual expenses. We are going to have them down here. And we again pick those values. So for the current liabilities, you will notice that the amount here was given, the amount that the increase when computing the external, it was a minus. So we can pick the value of 2015, which is this a positive number. They are supposed to minus this, that is to adding this. When you minus, it's like you are taking these these, you're adding them together. And when you pick that, it will give you the account payable. Same case with accruals. We just pick the value. The accrual was 12,000. Then we are using minus because the value that we given on the other side was a negative value. So we take this minus. It will give us a positive number. That is the number we will get here. So up to there, we have already computed the two values. We have already computed the two values. So then you need to add the two figures. You come down here and you can use the sum function. Just say sum these values from here to here. Again, you sum these values. You can use the simplest way, just typing the sum function. Then you highlight those cells. Starting from here downward. Then you press enter. Yeah. Can set this one into 2 decimal places. Just like this one here. And you'll notice if you are setting here, you can set up the borderline, bottom double, bottom double. And then again, you can also set this, have a top border like that. Then this heading is supposed to format it properly. And you'll have your balance sheet as at 31st December 2016. That evaluation you should check. So with this method, we said the method is called the percentage. The percentage of sales method, percentage of sales method. So now, if you check our balance sheet as at 2015, it was like this. Now this balance sheet, considering that the sales changed and some additional information, whatever helping us here to identify the values of this plant and machinery when the sales increased. And then finally, after checking with this additional information, you are able to prepare our balance sheet. That is our projected balance sheet as at 2016, based on those factors. So that is the task number 2, to prepare the forecast statement of financial position as at 31st December 2016. Then the last question, you're supposed to comment on 2 weaknesses of the method of this method of forecasting. And this one, you can highlight them in your book, and they always remain the same, that this will always remain the same. Those are assumptions. Remember that when you're using this method, we said that there are several things that you are really assuming. Not always that whenever the sales increased, that even the plant and machinery will increase. Not always you have that. Sometimes the plant and machinery remain the same, but still our sales increases. So you can write down these assumptions because they will not change. They always remain the same. And the first one is, we can call them the assumptions or the limitations, the weaknesses of using this method. One is that it assumes that the company is operating at full capacity. It assumes that the company is operating at full capacity. So here we are saying that this company is actually not always the company is operating at full capacity. Sometimes it is not even operating at its the top or the maximum limit stock. Maybe they are just working at almost half or quarter of their stock. Or maybe the company is operating at its the lowest time, maybe when most employees has been given the offs and leaves, or maybe when when there's kind of could be not an active day, when customers are not really attending as usual, because there are those times when the company is operating fully at its full capacity. But when using this method, it assumes that fact. Then number 2, it ignores the inflation in the economy. Ignores the inflation in the economy. Sometimes when you have inflation, businesses will tend even to sell, to make so many sales, or so much sales than even there are no inflations. But in the real sense, it's not really, they are not really making the targeted or projected profit. So this method is not actually checks on the inflation. It ignores that. Another thing that it ignores is the time value of money. It ignores the time value of money. So when using this method, it ignores the time value of money. So those are some of the weaknesses that we said always remain the same. No matter which question you'll be asked, that you can use those arguments that always retain the same. So that is the process of how you can prepare the financial forecast. This is using that simplest method. So you have to do an exercise. I've already sent that exercise in your WhatsApp. So you are going to attempt that question I've sent in your WhatsApp. So, and once you attempt the question, it is not typed in Excel, so you have to type yourself. So make sure you type the question, formulate that question. Then finally, once you formulate the question, you send you in Excel, then you send your working. Send your working. So please confirm that you have got that work, that question. And once you get, someone is asking where is the question. I have sent 2 worksheets. You can see the 2 worksheets. And those 2, not 2 worksheets, that is 2 scanned documents. 1 scanned document is what we are really solving on. Let me check. Just a minute. Just a minute, let me send it again. So there is that question written June 2010. I've sent it again there. So you just download, attempt that question. It was on 1 paper, June 2010. The question you're supposed to, the financial position related to Ogwezi Limited. Given that simple balance sheet, then from there, given some additional information that the sales of the year of this company amounted to 20 million. Then given the net profit ratio is at 8%, they were given a percentage. Then you're supposed to get the amount external finance requirement, perform the financial statement at that point. So that is the question you're going to tackle. Then before our time elapses, we're going to go through what we had prepared last time about the dashboard. Someone is asking about the dashboard. So that is what we were discussing last time before we had some problems with our network. And he said as when you are starting our lesson that you're going to go through it again. So after this, then the worksheet I already sent you, so meaning that you already have that worksheet with you. And you're just going to open that worksheet. We actually did the simplest way of defining the dashboard. But we have other ways of defining the dashboard, which is actually recommended by the examiner. For that worksheet I sent you, it was written dashboard. So maybe probably some people just lost it. Maybe we can upload it again. And then we upload. So that is the worksheet. Just download it in your, I'll send several worksheets. First, let's work with that. I'm also sending it in WhatsApp. So in the first worksheet, we did the use of conditional formatting, if you remember very well. And we were able to just visualize this data using the visual element here. The visual element that we used was the conditional formatting, data bars, and the icon set. So the next way of visualizing the work is using the pivot table and pivot charts, and then using the slicers. So when we are starting discussing this, somewhere we just stated about the pivot table, but today we are going to expound much on this pivot table. So the pivot table simply help us to analyze and simplify our work. Whenever you're using the pivot table, then it's especially when you have large worksheets. Sometimes you have those very large worksheets. That is the big data, and you're supposed to compute this big data, simplify, then create a dashboard that will help us to actually to simplify the work and refine the work, summarize work. So before you form any pivot table, you have to create a table, an Excel table. So that is our data about the dates, the sales, the regions, and is the data that I have already sent that to create and perform this analyze a dashboard in Excel. First step is to create a table, an object called a table. So we are going to highlight our data here. Just highlight that data. Then from insert tab, click what? Click table. Click table. So our table is supposed to have the table header. So you have to identify that it has the header. You just click OK. And once you click OK, you create a table. Actually, you have formed a table already. And our table name, if you are still under the table tools above here, our table name is actually referred to as table 1. But you can change the name of this table by just removing that. Then you type, let's give it the name, sales 2023. So that is always the first step. That is, you highlight the data, then you go to insert, then click table. Once you click the table, then OK, it will form that table. This table is an element that has now been identified in this workbook. And if you want to check the number of tables we have, if you press Control and G on the keyboard, G for girl, then you'll find that table. That is, you are going to that table. Go to this table. So that is an object that has already been marked on this workbook. So meaning that that is always the first step. First step is always to create a table. So that is convert the existing set into a table object. So once you finish this, then the next step is now to use that table to create a pivot table. So how do you create the pivot table? Then again, the pivot table will summarizes the data. It also helps us to organize data in a simpler way. That is, in a very simple way. So meaning that in our data here, we are working only with 21 records, but sometimes you have more records. So you just click on insert, then you select pivot table. So it will ask you, where is this pivot table coming from? Our pivot table is being created from the table or range, and our table name is sales 2023. That is where our pivot table source is being retrieved. We are retrieving it from here. So then it will ask whether the result of this, you want it in the new worksheet or in the existing worksheet. Probably in exam, you're supposed to compute it in the existing worksheet. Here, you're going to use new worksheet. Then you click OK. So once you click OK, then it will give you here a pivot table. You have pivot table 1, and this are the field, the pivot table fields. The pivot table on this side and the fields on the other side. So when you want to make now a table, then you're supposed to select the fields and move them in their respective field area. For example, if we pick salesperson, remember that salesperson was actually repeated several times. That Jack repeated like. So that means if you are to filter them, if you take the salesperson and put them in the row, then there is no repetition. You just pick those salespeople first. Then the values, you're supposed to take these values and you're supposed to pick. You just take sales and drag it to values, and you want to get the sum. So the sum, here you have, if you want to change the sum to average, you can click on that icon and then select various field settings. You can choose count or average. So you want to expound our work further because not all these salespeople worked in all regions. We can pick region and drag it to column. And once you do this, then you realize that it helps us see our data at glance. Now with a very fine conclusion that a salesperson like this one never did any sale in Central and in Central East North. So, and you can see that data, but there was a problem with the typing. I hope you have noted that it has given us 2 centros. So how do you delete a pivot table in case you want to remove it? You can first right click on that worksheet, then press delete. I hope you have deleted. Then you just change there. This was central. Yeah, then from there, you can now run your pivot table. So just click on insert. Then pivot table. So we click OK. So now when you are setting the sale, you can pick the sales first. You can pick the sales. And you can also pick another column. You can select region. And under filter, you can also select dates. So under these dates, sometimes it's important to field set. So here, you can actually show with a very simplified way every salesperson. So you can clearly see that some value is missing. That means that particular sales person never operated in those areas. Yeah, and with this, in case you want to filter by date, above here we have set the date. And you can select to make multiple copies. So the date is not a very big issue, but it's important to have that. So, and to show you the regions. Then from this data, we want to make now a pivot chart, a pivot chart. Notice that when you click inside here, then you realize above here you have the pivot table tools. And you have analyze and design. So the analyze is supposed to just pick some values, and we're going to click on the pivot chart. Then in the pivot chart, you can choose either one of the charts, the most common. So I want to pick this pie, then okay. And to form this. So that chart actually shows per region, because the region which was selected, I can even close this. It's a very fine chart showing on regions, that in case you want to filter the region, this is central region for those only 3 people. So you select all regions. Then if you choose by dates, yeah. So, and with this, you can also filter with what? Yeah, with sales people. You see now our chart will change it to, yeah, because keep on changing depending on the values you have set. So that is the pivot chart. The reason why we call it pivot, because this chart keep on changing. So filtering by dates, you have to go to more values and get more details there. Check. Huh? So last element we use for visualization is just a chart. Is now what will introduce us to this, what we call the sliders. So we already have this database. This was the original one. I've extracted from there. Now from here, you want to insert sliders. So you click insert sliders. And under those sliders, we don't need everything. Here, you just need the region, salesperson. Then okay. That will be our so, and here, in case you want to change and change, you want to select multiple, I write multiple. So then finally, I've shown you how you make those charts. You also try at your free time, just using the worksheet I'll send you there, and then you work out on that. So sometimes you may find other ways in which, just a minute. You can also produce a dashboard other ways. So I'm going to run a different set of data, but now with more details. And then you check whether so the pivot table can sometimes use several data sets. You may have like 3 or 4 data sets that has been, and once it uses more data sets, like I want to open some piece of data here, and then you notice that in this data, we have so many records. As opposed to filter, you say up to end, so you cannot scroll all of them, and so just press Control Home, take you to the first page. So here then you're supposed to make a so the procedure is the same, but first make sure you click inside the data, then select Insert, click Table. Then specify that you have what? Table head. That is the first step. So after making the table, of course, you have to name your table. Then the next is now inserting the pivot table. So you just click on Insert Pivot Table. So click OK, and then from there you can now filter out using this data. Probably you check on the parties. So you can just select party under the column. Then you have the votes. Yeah. So this supposed to be this. But you give only the one. So we can pick party and put it under the row because we want to see that defining factor. And finally, we can take the Let's pick one of these, like we can pick the age. And then finally, we want to check on the votes. So with this, maybe now we can pick two, place it here on the values. Just combine one, the last vote, the year's registration, ballot status. So I can have it here. Notice that it will give us, but now this counting, just counting. So if you want to remove it, again, you click and remove it. So and you find the values now as it is for this age, and so on. It shows that they are between. From there now, you can make a pivot chart, pivot chart. So as we wind up, I'll send you that Excel dashboard right away, so you can just download it. So you can put it here under those files. Now I believe you have got that question, that worksheet. You can download it and work on. Again, you check, go through those. You can type those exercises that are in the worksheet. Then you attempt creating the dashboard using the pivot tables. Once you make the pivot table, you said you must make a pivot chart. Pivot chart can also be column chart. The advantage of the pivot chart is that is the chart you can keep on changing. So for example, in this chart, I have just make it here. I've just picked all the data, and you realize that in case I want to change, I don't want to display all the parties, and I'll just select. So in case I want to reduce this, then again I will select, set like 2 or 1, and then to reduce that. Now showing only one group. So it simplifies your work, to make your work easy. So up to that far, then today we are going to stop there. Our next lesson, we are going to check on something today do, because one question about the sensitivity and scenario analysis. Although we just did a little bit of it, but we are going to check for the advanced level, the sensitivity analysis, scenario analysis, and forecast of financial statement. Then once we are through with that, we will get to have more questions on estimate cost of production. We will get a question about the break-even analysis. We're going to try those. This is what you're going to use for our division. First, you're going to go through them, and then we are going to analyze. For the audit purpose, we have one question about the budget. That one we will actually do it in our next lesson. Question about the budget. So that one will tackle on on our next lesson. We are going to tackle that. So the question of theorem, that one we'll have to discuss. I send you the notes, but I believe some people maybe have challenges to go through those notes and to read and understand the notes. So we are going to discuss them together. That you take only like one lesson, and then I'll send you more exercises for theory. Remember that theory is supposed to take the shortest time possible. So again, you also practice on the speed. I'll set one full question paper with the theory and the practical. Now we are going to have our own questions. Then you're supposed to tackle that. That is just a few days to exam, that you need to do at least one question from the beginning to the end. So today we stop there. As you have more questions, you can frame the questions in the WhatsApp group. Then I will go through them and check. Remember to do the assignment and send it before our next lesson. So have a good night.